Hello, everyone. Good morning. Today is July the 3rd. As promised, this is our first episode of My Mortgage and I. And in today's episode, the first thing I want to do is tell everyone, since today is the 3rd of July, one day before our great independence, happy July 4th or happy Independence Day. Enjoy it. Have a lot of fun tomorrow with family out there, enjoying the fireworks. And as promised, again, this is our first podcast, which will cover Florida hometown heroes, as promised, and will cover a second subject, which it is very important from my point of view, and it is a concern from a few real estate agents about why they consider that the entrance of multi-level marketing into real estate is an absolute cancer. Let's get on it, enjoy it, and I hope you get a lot of information. So today, basically, we promise you that we will bring in a very important subject on our podcast, on our first podcast, and it is the updates for Hometown Heroes. So today, we're going to take on Hometown Heroes updates and very important second part of the podcast, which is going to be a short one, short podcast. It's going to be to cover why some agents think that multi-level marketing structure business into real estate is what they consider an absolute cancer. So we're gonna take on these two subjects. First is Hometown Heroes. We're gonna discuss all the pros and all the cons for Hometown Heroes. The first thing we're gonna cover is what are the pros? What are the benefits of Hometown Heroes? And I'm gonna cover just a few of them, six of them. One of them is everyone that gets a loan through Hometown Heroes gets a lower than market rate. So what that means is the rate is normally between half percentage to sometimes up to 1% lower than a regular market rate for a BA loan, FHA, conventional, or USA. Let's say an FHA loan today is 7%. So your Hometown Hero rate is going to come in at 6%, which is pretty awesome. So second thing, those who use Hometown Heroes get is an upfront cost reduction on points, origination points specifically in certain counties, Florida counties, fees and taxes, which it is really great. I have seen some savings up to $5,000, honestly, in county taxes and recording fees and things like that. And then the upfront origination charge, which it is really huge right now. Because to get the rate you get with Hometown Heroes, you are normally required to have at least $4,000 to $5,000 in origination points, which it is awesome. So basically, the program saves you tons of money upfront. 0% rate, 0% rate on the loan, repayable for 30 years, which we're going to be talking about that later. The most important part everyone's looking for, 5% up to $35,000. So that's very huge. So 5% up to $35,000. So what does that mean? I mean, and how did we go from 25,000 to 35,000? There's $10,000 difference. And even though the state of Florida still don't have everything in writing, I can tell you this. They explained to me over the phone that the extra $10,000 comes in as a separate bond, which it is going to be that. Is that going to be the case? That's the question. I don't know. Why I don't know? Because they still haven't given us all the information in writing. If you go to Hometown Heroes online, all they give you is that you get up to $35,000. But I was told on the phone by one of their agents that the extra $10,000 is going to be in the form of a bond, and there's some guideline to meet, um, meaning some requirements, meaning that when it comes to the way they used to calculate income, it's going to change a little bit. As far as what I was told by one of the housing agents, he explained to me that they're going to use. I made the conclusion that they're going to use kind of like the USDA qualification method. And what does that mean? What that means is that to qualify for an USDA loan, you will have to meet income guidelines, household income guidelines, and applicant income guidelines. So, so household income limits and an applicant income limit. So that's what's going to change in this new Hometown Heroes. And it is that they added that feature, which it is a negative feature, because before, if you were on a house, in a home, and you were a high income producer, like $200,000 income earner, you could still go on a loan by yourself, like if it was you and and the wife or the spouse, and you wanted to go on a loan, one of you by yourself, even though you were above the income limit, you were good. Now the difference is that they're using the same as USDA, and that means is that if you make, let's say, over 135, 700 in Osceola or Orange County, now you don't qualify. All right, it's a bad news, but that's, I have to break it to you. So if husband and wife, or you know anyone, okay, that lives together in a relationship, basically go and they happen to to try to qualify. As I said, I mean, anyone with their spouse or significant other wanted to qualify if they make over 131,700 in Orange County or Osceola County. Happens to be that they do not qualify. So that's bad news. I have to break it to you because that's the truth. Before, if you were the two of you trying to qualify, and there was too much income, we could have said, "Hey, you know what? The one of the person in the relationship could simply apply by themselves and qualify by themselves and get up to $25,000." So that's not the case anymore. So that's going to be a negative. Um, but you can still get the up to $35,000. Can be with any loan type, USDA, BA, conventional, or FHA. Or let's just rephrase that. Could be with any conforming loan or qualifying mortgage loans, because we know there's other type of loans out there that they will not qualify for Hometown Heroes. It's all only loans which could qualify for first-time home buyers. So, and then veterans and military families don't have to meet Hometown Heroes guidelines or requirements. They get the up to $35,000 automatically. And then the last of the benefits is that provides first-time buyer the opportunity to get into their first home and make their family stronger. So that's the most important part of the program, which allows people and families to be able to have the blessing of homeownership. Now, there's a con to this program, or it's not negative or cash. No, it's simply that this is not free money. This is a loan repayable in 30 years at 0% interest rate. And that's a great news. Even though, some people might ask, what is the catch? Where is the catch? There's no catch. This is a very clean, nice down payment assistance program. Can definitely help people get into their home. And I promote it with my heart because I know what it means to own your first home. And everyone should have the opportunity to home ownership. And this is a great initiative by the state of Florida. Take advantage of it, use it. Don't be afraid of interest rates. Now, yeah, be aware of this. Be aware of the last point I made, which it is that it is repayable in 30 years, and you don't use it, you lose it, or not lose it, but basically you have to pay back. So, why do I make a point here? Well, think about it. Interest rates right now are in the six for hometown heroes, in the sevens for regular loans or interest rates. So let's say 2 years from now, rates go down to 3.5%. Now you have to keep in mind, 2 years from now, you haven't used or paid back not even 10% of the loan. So you are still going to be in the hole for $33,000, or possibly, yeah, possibly around 33,000. So you decide, oh my gosh, rates went down so great. I want to use that. I want to take advantage of it. I want to come down to 3.5 from 6.25 possibly. And now you have to be aware that when you do refinance, you have to have enough equity in your property to be able to pay back those $33,000. Okay, that's something you have to keep in mind because it's not free money. And because of the job I do as a broker, I do not like to just throw it at you and Hometown Hero is great and you can buy your first home and everyone is happy. And then 2 years from now, when you come back and say you want to refinance the loan because now rates are so low, now you have to find yourself in a bind where you will have to come up with tons of money up front to be able to get out of that loan. So it's not a catch. It is simply that you need to know that. So you need to be aware so that way 2 years from now you don't find yourself in a hot mess and then you now have to call your agent or call your loan officer or me and scream because you don't have to because I'm giving you the warning right now. So there it is. I think the basics for changes on Hometown Heroes. It is a great program. Again, use it. Use it to your advantage. Get into your first home. Call your real estate agents, but first call us because remember, if you don't have the money, if you're not qualified, it doesn't make you any good to call an agent and try to talk to them about mortgage when we are the ones who take care of that side of the business. So we take care of your mortgage, we pre-qualify you, and then your real estate agent get out there with you and find the home of your dream. So that's I think all I have for basically Hometown Heroes. I'm just gonna go back in the chat and see if there's anyone in there, which I think there's no one. Remember, this is our first podcast, and we're glad we're doing it. We are expecting that in time we're gonna have people come in by the bunch and be here with us, and and uh, and learn and grow with us. Okay, so give me just a moment. I'm trying to pull this up just real quick. Just a second. Let's see. Let's see if we have anyone in the chat right now. Okay. All right. Let's see who we have. If we have any. If not, we're just gonna move on to our next subject, which is um, multi-level marketing in real estate. Multi-level marketing in real estate, and why some real estate agents consider it to be the absolute cancer. So, and we're gonna review this subject, which is I think it's a very hot subject, and we should all pay attention to it. And I am telling you this. Sorry, I've been looking sideways, but I'm telling you this by personal experience. You should be aware and should know exactly what multi-level marketing is, and you should know exactly how it works. Why there are companies out there who promote their business through multi-level marketing. What's the benefit to you? Which are the pros and cons of basically devoting yourself to multi-level marketing? And my opinions here, I'm not gonna give you my opinions. This is basically some observations, some comments from agents, which when I told them I was starting this podcast, they said that they wanted me to talk about this subject. And I said, well, give me your points. I'm going to bring them up. And then what we're going to do is we're going to open up the conversation. We're going to ask agents to reach back to us and let us know if they want to come live and basically talk to the audience about what they think regarding multi-level marketing in real estate. So we want to hear from you. We want to hear if you are an agent that's right now going very well and being very successful in your business with any company that's promoting it has a structure, a multi-level marketing structure. Call us, and we'll be glad to have you on the chat. Unbiased, believe me. I mean, I have my opinions, but I think multi-level could be great. It could be bad. It all depends on the people. I mean, not everyone is born to be a doctor. So it all depends on who you are and how and what you like, and you know, if you're an introvert or an extrovert. So it all depends on a lot of things. So nothing is good or bad. It's all about you and what you can have done or you can do. So one of the first subject that was brought up to me is that the agents are saying that they consider it to be a cancer because real estate is not a mass consumable product. It's not a massive consumer product. Hopefully, I'm saying it right, and I think I am. For example, toothpaste or soap or detergents. And when I say those words, everyone right away goes to what? Everyone knows about Amway. So everyone goes Amway right away, or they go for life, or they go to many other multi-level marketing companies which have been very successful at what they do. Um, Now, what they said to me is, how can, by statistics, a home is held by a buyer for a minimum of 7 years? So, being that said, they asked me, how can somebody produce passive income or residual income out of something that sells every 7 years? And that's a great question. because as a product, and this is what we have to think about. As a product, one home or homes as a whole, they sell every 7 years. So how can an industry, how can a business sustain from someone that sells and produce an income of revenue every 7 years? That's their first point, which is really interesting. So I want to hear from you. Remember, I want to hear from those agents that have an answer for that. The second subject that was brought up is that um, real estate companies which are structured as multi-level, their marketing structures based on multi-level, are jam-packing the industry with licensee. And this is interesting. So, and to elaborate on that, what they said is there is not enough inventory. Even if there were inventory, based on statistics, a home that sells every 7 years, normally by statistics and by numbers, you will have more licensee, which, let me just make a point here. In my case, I think right now, because of low inventory, interest being so high, there's more agents now than there is homes to sell. So just my point of view, okay? But in time, if what they said is if these companies keep jam packing the market with licensees, where are those who make real estate their professions going to be left at? That's a good question. Because, again, I mean, if there's more licenses than homes to sell, if there's more distributor than products to sell, what are we promoting? What are we gonna make money from? So those are a few questions they asked. What is it that we're promoting? Remember, multi-level, to be legal, you have to have a product that makes sense, sensible product, something that sells and can produce revenue enough to sustain the uh, the multi-level structure where everyone makes money at their own level. Okay, and that's what makes multi-level marketing legal. Everyone has to make money at their level. So if you are at the top, you started the business, you make more money than those at the bottom. Okay, supposedly, but everyone makes money depending on the effort they did put into it. But if there's not, their concern is if there's not enough products to sell, where will the money be coming from? That's a very big point. And we should all keep in mind and consider. And if you are considering signing up for any type of business that promotes, it doesn't have to be real estate alone. Any business that promotes multi-level marketing, you have to ask yourself those questions because you might find yourself in the middle of a hot mess 10, 20 years later, finding that you gave so much and you got so little. And that's one of the unfortunates of multi-level marketing. Um, Unfortunately, that's the unfortunate thing about life. But, in certain things, if you give, if you become a doctor, you have a license. You could be out there and make money out of your license you have because of the profession you started in college. Um, but if you fall for the trap of listening to others and they telling you how much you will make if you keep putting an effort, you might find yourself like in a little rat race where you will be doing this. And the problem is anytime you're down, your upline will basically motivate you to keep going up, down, up, down, up, down. That's something I'm telling you. from personal experience because I was an Amway distributor for years, and I'm still signed up. Um, and I believe the business is great. The Amway business, the multi-level structure is great. It's just that you have to understand your capabilities. You have to understand who you are. You have to understand a lot about the concept before you devote yourself, and understand the cycle too, because there are cycles on every business. On the down cycles of multi-level marketing business, you will not make money. On the up cycles, you will make money. Like any industry out there has cycles, up, down, up, down. There's a lot of things you should ask yourself before jumping into the train of, books, seminars, and conventions, and motivation, and maybe possibly find yourself years later being very motivated, but maybe possibly broke, or maybe possibly, you know, successful. But in by experience, 90%, 95% of the people who jump into multi-level marketing business, 95% end up later looking back from the outside in, just realizing they gave a lot and they got just a little. So, so that's just a little opinion right there that I inputted based on my personal experience from my years in the multi-level marketing business. Now, that doesn't have to be you. Remember, this is just my personal intake on what you have to watch out for. Now, jam packing the market with relicensed seed is dangerous because, again, keep in mind, if that's true, if that is proven to be true, you will end up with one realtor, you know, maybe for every three households. I know this position is kind of like into the a little bit into the extreme side, thinking that we're gonna end up with one real estate per every one or two household. Um, but it is just a saying that we're going to be jam packing the market. We're going to be jam packing the industry. And those who are going to end up suffering are those who have made this industry their profession. And it's not fair. I think everyone should be looking into it. Them. So it's up to every realtor to start talking, to start complaining if they think it is not a fair practice, and if they think it's going to put their profession at risk. So, but again, one invitation to everyone: this podcast is open to panels. If you want to be part of a panel, just let us know. We'll invite everyone and we'll make a panel, whether it be one, two, three, four, five. Whoever wants to come in and talk about this subject, you're more than welcome. Call us, reach out to us. You can reach out to loans at hdhmortgage.com, LOANS at hdhmortgage.com, or you can go online and find us at www.hdhmortgage.com. Keep in mind that we're going to be here every week. It might be Mondays early in the morning, or it might be Mondays afternoon, but we'll let you know. You can go to our Facebook page. You will see online on our website, you will see a section just for our podcast where you can see the videos and see announcements and see what's going to be the next subject we're taking on. Thank you for being with us, and see you on the next one.